Welcome to TradeTheMBI.com. This is Isabella Morgan for my Babu John Morgan. Today's video report is for Thursday, May 28th, and Ecco voi Babu.
Thank you for that, Isabella. One more of the same, super excitement. So we get the early morning pre-market jump that then faded off, retested the lows, and then is bought right back up at the algo level, and boom, there you have it. Same old. We've got rising red and everything else like that. So it's been consistent. It's just been a back and forth with the trade-off of midterm and short-term buyers easing off here and there, but we've had continually rising shakeout off of these setups. So nothing too dramatic, except for the ranges are pretty good, and this is the optimism of those areas opening up. And of course, people are going to say, but what about the numbers? Yeah, well, this is not so important at this particular stage. Modifying for adjusted deflationary, dollar is the real issue that's taking place. And I think that it's been proven by the ultimate rising of the market, just as expected from, when we were talking about this before, long before the even began the rise. So NQ, holding off a little bit, not as, but that's fine because it's actually well ahead of the S&P, and so a little ease off there. Of course, there's some concerns with the supposed executive order that's supposed to be coming out about social media. Will that affect tech giants? Blah, 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 blah. Probably not. I don't know that there's that much that's going to take place there. But nonetheless, this is where politics is going to get into the market without any doubt. We can expect a lot more of that. Euro's at the high side of its range. It's not like there's real optimism about growth in the EU because they are opening up more travel in the EU, but not for other areas. So it's relative nothingness. But it's the US that's going to be the question mark going forward in the split economy moving ahead. And that's what oil is waiting for. So it's kind of flatlined here after reclaiming the previous lows. It's kind of in that area where it's ugly, but it's not impossible for a sustained existence kind of concept. Is there equilibrium in that market yet? No, because there's still way too much supply. And from a gold standpoint, of course, it had its little dip below the green line here. Got popped back up pretty decent because of the short-term buyers that it popped back into it. But it's a complete reset here of the DOC red in that. So the earliest turnaround provides for the next leg up. There just isn't the pressure yet, and that's the important one. But we knew that there would be back and forth with gold in that standpoint, but with the overall bias is still to the upside, and that's not going to change, especially with the amount of liquidity that's been thrown at things. But as long as you can keep prices artificially low and interest rates artificially depressed, now the question becomes, though, is when the market decides to balk on that and says, we're tired of that. And that's another issue. It's like, well, you can't put your money into treasuries in that because you're not going to get any yield. So that also bolsters the fact you're forced into the equity market. So here's where we started with. Big rise, a lot of positive extremes going all the way back to it. We had the algo level already marked, and sure enough, they came right back to it. The early pop failed pretty quick. That led to a new leg lower to guess what? Oh yeah, that's right, the other algo level that we had already marked. And it built up pretty quick off that one. And from that point, early on, it was the secondary rise right here, turned green, and then boom, it was just all the way up. Let's expand this chart because it's getting a little tight to see. So make it a little easier. There we go. And as we peeked out up here, we got a couple of little DOC spreads, and those were all off. Look at that, complete steel resets and cyan under red for long duration. So this could have failed more, but you get an immediate fall off of gold. Now, it did dip below the red line, so we were expecting a refill of that, and guess what? Yeah, we got it. No shock with that one either. We did mark additional levels because you had the other positive extremes. So puts us in another level in between there, and that's nice. So you get a decent range between each of these. gives an idea. Yes, there are some additional ones that go all the way through on these, but a lot of those now have been filled, at least all the way back to right over here. So that just leaves a couple of more going back to that 3013 range. Doesn't necessarily mean I expect it to get hit right away. I mean, you still have artificial float of things, but given the range that we saw, it's pretty nice. There's just no disputing how effective that is. And if you're willing to sit through it, I mean, you can really do fairly well with it. I mean, you're talking going from the 30s all the way back down to the 2990s. I mean, that's intraday 40 point straight down. Took a little time, but who doesn't have time right now, right? Actually, I don't. I've been very busy with a lot of activity and things of stuff that is starting to open up here and everything like that, which is good. So, as always, I will keep you updated and be ready to send out updates for indicators for next month. And I'm going to see if I can finalize a couple more of these additional changes for the paint bars, and that will be nice if those get included into next month as well. So, as always, trade well. We'll talk to you later.